Hello and welcome to another session of the My Solo 401k Financial My Community daily webinar series. We're excited to get started today to discuss get paid to save, how to claim up to $2,500 in 401k tax credits with the Savers Credit and Auto Contribution Credit. If you have questions or topics that you want to discuss, please chat those over, as we're happy to go through those questions or topics, whether on this topic or an off-topic issue. In the meantime, we'll dive into today's topic. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So today, again, we're here to discuss how to save up to $2,500 in 401k tax credits with the Savers Credit and the Auto Contribution Credit. So we're here today to discuss two credits and how they apply to solo 401k owners. Again, not tax advice. As always, consult your tax professional. So let's first lay the foundation with what is a solo 401k. Well, it's a 401k plan for a self-employed individual, specifically an owner-only plan, or it's technically referred to as a one-participant plan. Now, you can have multiple participants like a husband and wife, but they both have to be working in the business in order to be eligible. So the key is that there are owner only or spouse and owner who participate in the plan. In other words, there are no non-owner, non-spouse full-time W-2 employees. What makes a solo 401k very powerful in terms of contributions is it has the highest contribution limits for any defined contribution plan available to self-employed individuals. And then if you set up a truly self-directed solo 401k, like the one that's offered by My Solo 401k Financial, then you can also make not only pre-tax contributions to reduce your taxable income now for the year for which you make the contribution, but also you could make Roth or even mega backdoor Roth contributions, where you have the potential for tax-free growth. Moreover, our plan also comes with a lot of advanced features, all the advanced features that are available to solo 401k plans, such as the ability to take a 401k loan, the ability to invest in alternative investments like real estate and crypto, the ability to do in-plan Roth conversions, etc. Now, the key to be eligible to get access to this amazing plan is that you have to be self-employed with no full-time W-2 employees. That's where we talked about it before, how it's an owner-only plan. Now, let's layer over that the Savers tax credit. So, and by the way, we have a blog post on our blog. If you go to mysolo401k.net, under Learn, there's a drop-down menu that goes left to right, home, about, solo 401k, go under Learn, and then click on blog. You can easily find our blog, and we just posted one about this topic. But there's a lot of good detail there in terms of eligibility for the tax credit, the Savers tax credit, et cetera. But we first want to introduce it, and then we'll give more of the detail here in a moment. So the objective of the Savers tax credit is designed to help lower and moderate income earners save for retirement. And the law will therefore give you a credit by in exchange for making contributions to a retirement plan. So in order to qualify for the credit, the individual can make contributions to an IRA, or they can make contributions to a solo 401k, assuming they're also self-employed and eligible to set up a solo 401k plan. Now, the type of contribution that you have to make to the solo 401k plan is an employee contribution. So with a solo 401k plan, it's for a self-employed individual. So if you can make multiple types of contributions to the solo 401k, you can make employee or employer, or if you have a plan like our plan, even voluntary after tax, which is a type of employee contribution. So if someone is eligible for the Savers tax credit because they have low to moderate income, and they're eligible to set up a solo 401k because they're self-employed with no non-owner, non-spouse employees, they can qualify for the tax credit by making employee contributions. So that could either be pre-tax contributions that reduce your taxable income, could be Roth employee contributions, or it could even be voluntary after-tax contributions, but just not employer contributions. And the tax credit will reduce your taxes. That's the idea, right? It's not a tax deduction, it's a credit. So it's a dollar for dollar reduction in your tax liability. So more on the qualifications are that the individual must be 18 or older. With the solo 401k, you've got to be 21 or older, as well as being self-employed, not a full-time student, not a dependent. So you can't be claimed as a dependent on somebody else's tax return. You've got to make those eligible retirement contributions. So in the context of a solo 401k, that means an employee contribution, pre-tax, Roth employee, and or voluntary after-tax. And you've got to be within those AGI limits. Now, the limits will depend on how you file your taxes, whether you file as married filing jointly, head of household, or single filer. Now, as your income goes up, the amount of the credit will go down. So there's a graduated scale, and then above a certain income, you wouldn't even be eligible to claim the credit. So you've either got to be low or moderate income. Now, the maximum contributions that are eligible for the credit is $2,000 in the case of someone who files as a single filer, or $4,000 if you're married filing jointly. The max credit would be 50% of that amount. So if you're below the lowest AGI limit, right? Remember, it's a graduated scale. So up to a certain amount, you can claim a 50% credit. Once your income goes above that amount, it drops down to a 20% credit. Once it further goes above that amount, it's a 10% credit. And then once it's above a certain amount, there's no credit. So it's a graduated scale. But if your income is within that highest range, right? In other words, it's below the lowest cap, you would be eligible for a 50% credit. So in the case of someone that's filing as a single filer and you make a $2,000 contribution, employee contribution to your solo 401k, you would be eligible for a $1,000 credit. If you're married filing jointly, you're below that max AGI amount to still qualify for a 50% credit, which applies to a married filing jointly filer, and you make a $4,000 employee contribution to the solo 401k, you qualify for a $2,000 credit. Now, you have to make the contributions by the deadline. You have to file Form 8880. It goes on your personal tax return, so it goes along with your 1040. It's a non-refundable credit, so it potentially could reduce your taxes all the way to zero, but if your tax liability is $500 and you have a $1,000 credit, it's not refundable. You're not going to get a $500 refund. Now, that's the first credit that we're here to talk about. So that's potentially up to $2,000 if you're married filing jointly, you're within the AGI limits, you make the $4,000 employee contribution, and you qualify at the 50% credit amount. So that's potentially up to $2,000, right? Now, there's another credit that you could get for setting up a solo 401k or even upgrading an existing solo 401k plan to our plan. And this is the auto enrollment tax credit. So different credit. We'll talk about some of the differences. So first of all, different in amount. So the auto enrollment tax credit is $500 per year for 3 years for having a solo 401k plan that includes the auto enrollment feature. So you need to have a plan like our plan that includes that automatic contribution feature. Again, this could be for a new plan, or even if you have an existing solo 401k plan somewhere else that's a basic plan and you want to upgrade to our plan, now the self-employed person would be eligible to start claiming these credits of $500 per year for 3 consecutive years. So again, qualifications, you need to have a solo 401k plan, which therefore means you need to be eligible to set up a solo 401k, right? You're self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Number 2, you set up a solo 401k plan that includes the automatic contribution arrangement, the EACA arrangement. That's going to apply to all our new plans going forward. Now, you could set up a new plan with us, be eligible to claim the credit, or if you have a basic plan somewhere else, could be at Fidelity, Schwab, Vanguard, right? Across the board, you then restate the plan to our plan. Now your plan will include the feature to make your self-employed business eligible to claim the credit. So it's going to be $500 per year for up to 3 consecutive years. that's $500 in total. Again, it's a credit. It's a dollar for dollar reduction in your taxes, right? As opposed to just a deductible expense, which reduces your taxable income upon which your tax liability is calculated. So because it's a dollar for dollar reduction in the tax liability, it's much more powerful than just a simple tax deduction. Claiming the credit with just ensuring that your plan documents includes the feature. You file Form 8881. For our customers, we provide a deep dive webinar that we hosted with an IRS enrolled agent that goes through step by step how you claim the credit to make it easy. It's just a simple 2-page form. So you can stack the credits, right? This is how we get to the $2,500 amount, right? Because you might be married filing jointly. Your income is below the AGI where you still qualify for a 50% Savers credit. You make a $4,000 contribution, employee contribution to the solo 401k. Now you're eligible for a $2,000 credit. Then you set up a solo 401k like our plan that's eligible for the auto contribution credit. That's another $500. That gets you to $2,500 in 1 year in credits for saving to your solo 401k. Another example here is someone that has they're eligible for the $1,000 credit, right? They could be single. They made a $2,000 contribution. They're eligible for a 50% credit. That gets them $1,000. Then they get another $500 just by having the auto contribution feature. Keep in mind that auto contribution feature doesn't mean you have to contribute according to the default percentage. Having the auto contribution feature establishes a default percentage, but you're allowed as the participant to opt out of the default, which allows you to contribute in whichever amount or schedule you prefer, but you still would be eligible to claim the credit. All right, wonderful. Thank you so much for bringing the question. We'll go through the question now. If there's any other questions, please don't hesitate to chat that over, whether on this topic or other topics. If you're finding this to be helpful, please like this video. It helps us to get the word out to other self-employed individuals, other solopreneurs just like you. Share it with others that might find it to be helpful. We really appreciate that. Also, we invite you to subscribe to our channels, whether you're on LinkedIn or Instagram or X or YouTube. We go live every day. So if you subscribe, you get notifications of when we go live. So you can join, ask questions, just participate in the conversation, or just hear what we wanted to bring and share. We always like to bring at least a topic to discuss. Anything special that needs to be done if the client already has a solo 401k set up at full service brokerage firms such as Merrill Lynch, Morgan Stanley, RBC, Stifel, or Raymond James, just restating the plan with us is what it takes to be eligible for the auto contribution credit. Now, if you are just looking to do the Savers credit, you wouldn't need to restate the plan with us to be eligible for the Savers credit, of course. But why not? Because now you also get the auto contribution credit. Hopefully that helps. Thank you so much for the good question. We also want to invite you to our community. We have over 30,000 members. It's totally free to join. All are welcome. We have forums. We have a library of videos and webinars. We have the industry's first AI, which you're free to use at solo401k.ai. You can join the community at mysolo401k.net/my community, or just send us an email at business@mysolo401k.net, and we'll get you added to the community. We'll give it another moment, see if there's any more questions. Great. Well, again, please we really appreciate that to help us get the word out. Please subscribe. We're totally invited to continue the conversation. All right. Well, thank you so much, everyone. Take care now.